Have you ever opened your investment app, seen the market down again, and wondered if you already missed the future while everyone else seems ahead? For many Americans right now, money feels uncertain. Prices at the grocery store are higher, rent keeps rising, and even a stable paycheck doesn't stretch the way it used to. Then you hear about artificial intelligence changing everything, and one question quietly creates anxiety. Is this another opportunity passing by, or another risk waiting to hurt people who arrive too late? Welcome to Crypto Brain Power. This channel exists to break down complex market ideas in a calm, beginner-friendly way so everyday people can understand what's really happening beneath the headlines without hype or pressure. Before we go deeper, I'd love to hear from you. What stock market or AI-related topic do you want explored next? Share your thoughts in the comments. Subscribe to support the channel and continue learning with us. When people talk about AI stocks in the United States, the conversation almost always starts and ends with Nvidia. And for good reason. Nvidia's chips have become the backbone of modern artificial intelligence, powering data centers, cloud services, and advanced research across the world. But history teaches us something important. When a single company becomes the symbol of a revolution, opportunity rarely stays confined to one name. In the early days of the internet, many believed only a few tech giants would benefit. Then slowly, quietly, other companies built the infrastructure, the platforms, and the tools that made the digital economy real. Artificial intelligence is following a similar path. The question isn't whether AI will shape the future. The real question is who else stands to benefit as it spreads through the US economy. Let's slow this down and make it clear. Artificial intelligence isn't one product or one industry. It's a layer of technology that sits on top of everything else. It touches cloud computing, healthcare, finance, transportation, manufacturing, and even how people shop online. That's why looking beyond Nvidia matters. Start with Microsoft. Microsoft doesn't just build software anymore. It runs massive cloud infrastructure through Azure, which supports AI tools for businesses, governments, and startups. From productivity software to enterprise systems, Microsoft is quietly embedding AI into products millions of Americans already use every day. This isn't flashy innovation. It's practical, sticky, and deeply integrated. Then there's Alphabet, the parent company of Google. Search, advertising, mapping, and YouTube all rely on machine learning. Alphabet has been investing in AI research for years, long before it became a headline trend. As advertising markets tighten and competition grows, AI becomes a tool for efficiency, personalization, and long-term defense. Amazon is another name that often gets overlooked in AI conversations. Most people think of online shopping. But behind the scenes, Amazon Web Services powers a massive share of the internet. Companies rely on AWS for data storage, computing power, and increasingly, AI services. As businesses look to automate operations and analyze massive datasets, Amazon benefits quietly and consistently. Now consider companies like Meta. Social media platforms survive on attention, and AI plays a central role in content recommendations, ad targeting, and platform moderation. As privacy rules tighten and ad markets fluctuate, AI becomes less about growth and more about survival. Tesla enters the conversation from a different angle. While often discussed as a car company, Tesla is heavily focused on AI-driven autonomy, robotics, and energy optimization. Whether or not full self-driving arrives on schedule, the company's investment in data and machine learning places it in the broader AI ecosystem. Beyond big names, there are companies building the tools that make AI usable. Semiconductor equipment firms, data center infrastructure companies, and enterprise software providers don't always trend on social media, but they play critical roles. These businesses often experience steady demand rather than explosive hype. At this point, it's important to pause and talk about risk. Markets don't move in straight lines. Federal Reserve meetings, CPI inflation data, and U.S. jobs reports can shift sentiment overnight. Interest rate decisions affect valuations, borrowing costs, and investor confidence. Even the strongest companies see volatility when economic uncertainty rises. Many investors learned this the hard way during market drops in recent years. Apps like Robinhood made investing accessible, but they also made volatility feel personal. Watching daily price swings can trigger fear, impatience, and emotional decisions. Platforms like Fidelity and Charles Schwab remind us that long-term investing has always required discipline and perspective. AI stocks are no exception. Excitement can inflate expectations, and expectations can get corrected quickly. That doesn't mean the story is over. It means timing, patience, and understanding matter more than headlines. Think about the S&P 500. It's filled with companies that adapt slowly, evolve steadily, and survive multiple economic cycles. AI isn't replacing these businesses overnight. It's reshaping how they operate internally, reduce costs, and stay competitive. This is where clarity begins to replace confusion. The future of AI investing in the United States isn't about finding one perfect stock. It's about understanding how AI weaves into existing companies, strengthens balance sheets, and improves efficiency over time. Real people don't experience markets as charts. They experience them as stress, hope, regret, and learning. Many Americans are still rebuilding savings after inflation shocks. Others are cautiously re-entering markets after painful losses. That emotional context matters. Long-term thinking doesn't mean ignoring uncertainty. It means accepting that uncertainty is part of growth. AI will continue to face regulatory questions, ethical debates, and economic cycles. Some companies will overpromise. Others will quietly deliver. The goal isn't prediction. It's understanding. When you understand how AI fits into real businesses, market noise becomes less overwhelming. You stop reacting to every headline and start observing patterns. As we move forward, patience becomes a strategy. Discipline becomes protection, and curiosity becomes an advantage. History shows that transformative technologies reward those who stay grounded, informed, and realistic. If you're navigating this market with caution, you're not alone. If you're learning slowly, you're doing it right. Progress in investing often looks boring before it looks smart. Artificial intelligence will shape the next decade of American business, but it won't do it overnight, and it won't do it through one company alone. Understanding that is where confidence quietly begins. This video is only for educational purpose, not financial advice.